Now we will have a panel discussion. Whatever questions you have in mind, so during the panel we will have time for Q&A. You can ask the questions. I will request Mr. Samir Shetty from Axis Bank. Is he here? Yeah. Then Mr. K.M. Reddy, General Manager IT from UBI. Then Mr. Vivek Sethia from Insursa, Texas. Yeah. And Mr. Ravi T. Sheshadri from United India. Yeah, please. Please have this one. Yeah, yeah. I will give an introduction. You will give an introduction? Yeah, please have a seat. One more chair? No, enough.
Can you give me all the names?
Yeah. I will give the introduction. Please have a seat. Mr. Samir Shetty is the head of digital business and transformation at Axis Bank. So we heard the perspective of the leading bank, and now we will have one of the fastest growing private banks. We will hear his views. Then we have Samir. Then Then Mr. K.M. Reddy from Union Bank of India is a general manager. He is a DSCA award winner. He also got the award of CISO of the year. And he has done so many other, obtained so many other qualifications related to cyber security, digital, IT architecture, digital innovation, etc. Then Mr. Vivek Sethia, he has come from all the way from USA. He is the president and founder of Insursa, US-based insurtech company, driving innovation in the global insurance ecosystem. As you are all aware, unlike in banking, in India we have only 150 companies focused on insurtech. So we are happy to have you here. And whom I left out? Yeah. Last name.
Ravi Sheshadri.
Yeah, Mr. Ravi Sheshadri used to work in United India in a very senior position, and he is involved in the IT and digital initiatives. So we have an excellent panel here. It will be moderated by our Mr. Prasanna Logar.
Good afternoon, everyone, and thank you, sir, for introducing all the panelists. So I have a lot of liberty now because we had such a thoughtful, powerful session by Rajiv sir on digital public infrastructure, where he has spoken about India story before DPI, how it was, various opportunities, how banks, insurance companies, and the regulatory new business models which are coming in, adoption the way it has happened so far, and various more adoption or potential use cases in example with account aggregator and some of those upcoming DPS like ONDC which is going to come up, actual numbers, the current challenges, and how a good DPI infrastructure or how good DPI should follow a good framework, and the challenges like interoperability, scalability, security, how it could be. And with all the last, maybe we can say our DPI journey started with India Stack, where we had Aadhaar starting in 2008-9, picked up by government and UIDI. We are blessed with the good leaders like Nandanji and good leaders from government who said let's adopt digital public infrastructure in favor of adoption of a digital India momentum. While it is happening, we have got good help from corporate world with a good technology backbone like internet and all. After 2016 and so on, we have seen how adoption has happened on DPIs. No matter the way in one of my session earlier I said, like branch banking was the primary channel, and eventually with rise of internet, smartphone, now mobile banking is a primary channel, while other channels are supporting. And while this is journey, tomorrow it's going to be marketplace. What services we get from banks, insurance, or wealth companies on respective channels will get to non-regulated entities through regulated frameworks powered by respective regulators, RBI, SEBI, IRDA, and others will follow. Ultimately, why DPI is there? It itself says digital public infrastructure. How can we provide those services which are coming from one company? Rather, it should come to all the customers in one particular country. That's a journey we have seen. As far as the numbers are concerned, we are well equipped with the Aadhaar, well equipped with some of those eKYCs, DigiSign, eSign, and UPI as a payment railroads. Now we are talking on consent framework, which is account aggregator framework. And it's not only banking. Sir spoke about Bhashini, Abha, and almost there are 40-50 plus DPIs in country like India. And I think we are one of those templates for rest of the countries, wherein we have already seen some countries in Africa, they are adopting Aadhaar-like framework, or there are another 12, 13 countries who are partnering with NPCI for the UPI. Right? I personally have done Singapore, Nepal, just to curiosity whether it really works. It works, and we have another example of a DPI, which is another on travel. Right, whenever you go to airport, earlier days we used to wait for with your check-in process and security process. My calculations are so easy these days when I come from Bangalore to Bombay or other countries, other cities within India. From home to the airport 40 minutes, and inside in front of the gate another 7 to 8 minutes, just because of DigiYatra Foundation. And now that has become another powerful, and it's not only airlines, it is going to go in maybe railways and commuting between countries, between Bangladesh and India, and it is going around that. Apart from DigiYatra, I think on the logistics also another DPI is coming in, built in within a Robert Bosch. So I think DPI is a way forward while we were operating in a brick and mortar to digital channels. And as a customer demand the same service across on a marketplace, we need a very good trusted network or framework which DPI offers. So here we are, and we have such a powerful panel where we have a regulator, and sir has spoken almost all the points, and it has made a job easy for me also what I'm going to ask. So, and we have a bankers out here, we have Mr. Vivek from insurance and experts, Shashadri sir. So I start with Reddy sir. Reddy sir is a veteran in banking, worked in Union Bank at multiple levels, and he must have seen the whole journey of various DPIs being adopted by a bank, and none other like one of those powerful bank, Union Bank of India. So Reddy sir, how do you see life without DPIs for banks while you are providing same services before 2014 and now? How it has become so easy to get more customers, like some of those straightforward, or you say STP process to onboard, serve and engage. I think these are the three areas where we go back to the customers. So sir, if you can guide. Yeah.
Yeah, good morning to everyone. So thanks to Rajiv sir, he has set a context on how the DPI works and how it is important to all of us. So just I will talk about what Mr. Prashant Lohar gave the question. See, in my entire career of 20 years in the public sector bank, I seen a phenomenal transformation in last 5 years. So this all happened because I was part of the IMPS, the journey which NPCI started. Then post IMPS, the UPI platform has come. So I seen all, that roller coaster, its ups and downs of the payment system. Even in fact, the banks also took a lot of pain in developing, implementing these solutions, reaching to the customer. So all these things now, I think somehow India, I mean, the banking sector has got some good footprint, I mean, so got good stability on this payment system. So if you go back, 10 years back, ideally the banks were known for only advances and deposits. But today, banks are more prominent on the digital side, that is on the payment side. So what sir has said, the total addressable market, though we have passed lot of journey, today payment side it is only the 23%. That means lot of things should happen actually. So looking at this journey, today banks like us, we are thinking the digital bank means the concept is bank within the bank. How we can establish a digital bank within the bank, so that we are also thinking that how we can publish a digital bank balance sheet altogether. That kind of, the thought processes are going on. And at the same time, we are heavily investing on the digital platforms. Because why we want to have a digital platforms with a higher amount of investment? Because one, the point is, whatever innovations are happening in and around in the ecosystem, because suppose the ULI is coming up now, UPI has different, kind of features are coming day in, day out. So all these things we have to integrate at one place. Today, lot of digital solutions which are working in silos. That's why there are always be a hiccups in terms of delivery of the services, digital service. Many a times you must have seen there are some kind of hiccups. Sometime it happens, sometime it won't happen. So there is a issue in terms of technology also. We are seeing that the way, since the digital transactions are highly exponential growth, and our technology also not that scale, to cater that kind of volumes. So we are keep on struggling with the technology also, how we can keep on upgrading the technology, scale up. So overall, what I mean to say that the kind of innovations which are going on, bank is harping on, to adopt those technologies and reach to the last milestone. So the essence of entire, adoption or the digitization or whatever we are saying today is only the, how we can give a better customer service by onboarding them as quick as possible, maybe with few clicks. They need not to come to bank and do their work in the mobile or some other, channels which we are providing. So more or less, it is not only a convenience. We don't mean it's convenience. We are more focused on the customer delight. We are more focused on the customer centricity. We are more focused on the personalization. How we can give today, we admit that, the analytics which runs in each of your customer profile, we can understand in a better way which customer is very much attracted to the asset side or liability side or the insurance side or maybe the payment side or the some of the digital, new products, so or innovations and all. So the banks are working on a, more or less today, they are more data driven now. They are churning the data and understanding the customers, one, the existing customer and also the customers who are coming from, they are not part of the customer, so they can also new to the bank. Normally we call as a ETB and NTB. So there also we are seeing that how they can onboard without coming to the bank. The entire the gamut of, the functions, the banking functions which are right now going on, it's purely focused on the digital. We are working on that, how we can do a digital onboarding. It may be MSME, it may be retail, it may be large. Today we are not touching large corporates, still we are thinking that how we can help them through a digital to save their time, to save the cost. So it is a win-win situation for both customer and so banks are especially, heavily, today what I am saying is that looking at the kind of innovations it is coming, maybe the DPI, there are many DPIs are coming very fast in different areas. It may be identity side, or it may be on the MSME lending side, or it may be, the government schemes which are coming like insurance, like other schemes which are coming. So these I mean, banks are focusing how we can implement as quick as possible, not only through a system with, I mean, not a individual technology, through a integrated technology, through a platform.
Yes.
Now we are all talking about, how the platform can be leveraged to enable all the services, digital services, to the larger extent of the customers, and how we can reach to the bottom of the pyramid. That is the what our efforts which are going on in the banks. So
I think a wonderful setup after Rajiv sir's whole session. I think the way, sir, you spoke about how banks are leveraging DPIs, and there is no way out for any business model, integration with the fintechs or integration with the big techs. We have seen larger use cases. Under UPI, we have seen how payment now is being driven by Google Pays, Phone Pays, WhatsApp, and many other methods. Apart from that, many fintechs are now for digital lending as well as for MSME part. They are, or even NBFCs now doing co-lending with the banks. So I think API is a way forward. While there is a one-to-one integration with the banks, DPI comes as a one layer, and say let's build on this business model on top of the banking services. But I think I'll move on to the yeah. So I'll move with Samirji. Samir, you being part of Axis Bank or banking ecosystem, we have seen how these various DPS came into the life of banks. Say UPI in 2016. Before that, eKYC, and then we are talking now account aggregators. ONDC is coming, which is helping to standardize the e-commerce business models in India. We have seen bill payment, which is being standardized at BBPS. Now, as a DPI journey, when we adopt, while the framework is ready, can you just guide us by seeing how banks are adopting it on a technology side, on a governance side, like how they decide on the fee structure, where today account aggregator is little bit struggling model, while it is still there. While UPI was a powerful example, right, where from day one everything was clear, technology adoption way forward, as well as a fee structure. So how, like India has adopted, and India is a case study for many other countries. But how it can be? What are those best practices wherever banks are part of that whole momentum? Because while adopting as a transactional integration, but how banks are participating in the exercise of day one of any of the DPI until it goes and get implemented in bank like Axis Bank. Yeah.
Sure. So as I understand, three parts to your question. First is how are we implementing and what are the challenges and so on and so forth. Second is how do we ensure adoption and stuff like that. And last is the economics and the commercial model, etc. So before I answer, one thing I want to say is that UPI has spoiled us as a nation because it has just become like this massive wildfire. And now the benchmark is that unless you hit 1 billion transactions, you are not successful. So that's not the that's not a fair benchmark, right? And the other thing I would say is that UPI actually started in 2016. Yes. UPI started to do billion transactions all after COVID, right? And there were two seminal events. One was demonetization, and second was COVID, which dramatically kind of helped the adoption of UPI. The third thing, which is worth thinking about, is that the fintech industry, which are the lead now, kind of GPay, PhonePe, Paytm, etc., they have collectively spent $5 billion or more behind making UPI known and cashbacks and the like and stuff like that, right? So it has taken two Six Sigma events, demonetization and COVID. Hopefully we'll not see either again in our lifetimes. And $5 billion to take UPI where it has come. So now to expect that, account aggregator launched 3-4 years back and said it should do, I think it's a little, we are expecting too much. But in 5 years time, will this DPI change and, become kind of integral to our lives? Very likely, yes. So, I mean, it's a little bit kind of context before I dive into it. So how we are doing and what and so on and so forth. See, there are, if we think of banks very simplistically, there are also many nuances. We do 3 types of businesses. One is payments, which is transfer money from one part to the other. Second is lending, which is give loans to people. And third is we do some fee income businesses like Forex, or mutual funds, insurance, etc. I'm very very simplistic, right? It's far more complicated, but at the highest level, payments is the easiest to be digitized, because frankly, you can press a button and money can go from one part to the other. But the moment you come to the other parts, like lending as an example, you can't just press a button and give a loan. You have to look at the customer. You have to figure out that the customer exists. You have to figure out that, the customer is lendable. You need to know their address. You need to know where they're employed. You need to know how much income they have, and so on and so forth. And same with the fee income products, like Forex as an example, there are so many regulations. You have to be within LRS, etc., etc., etc. So these are tougher. And the digitization of these and the success of the DPI in these areas is not just a function of the DPI, it's also a function of the bank. Like, we have to create a digital lending journey for the account aggregator to take out. If our journey is that for taking the bank statement it is digital, but then for other 20 documents I'll still come to your house and you still give me Xerox copies and photocopies and so on and so forth, it's not going to kind of scale. And so when we work on DPI, the first question is that what is the end-to-end journey and how are we making that digital? And that is not straightforward, right? So like the account aggregator, so we were the first bank to go live on account aggregator. We've had at least 7 or 8 different journeys on account aggregator. Our account aggregator adoption is still in the 15% range, which means 85% of our journeys are not using account aggregator, because there are other things that, it's not the account aggregator that's the issue, there are other things around it that become an issue. This number though is increasing, and over time, it'll kind of hopefully get better. So just to your question on how we implement DPI, the thing to think about is what is the end-to-end journey and how are we making that fully digital. The second question was on adoption. Again, adoption is a function, like if so I'll give you an example. In 2019, pre-COVID, and I'm now talking of Axis Bank, these numbers may not be relevant for other banks. On average, we used to get 200 footfalls a branch, right? On average, like obviously smaller branches, smaller, higher branches, higher, etc. But on average, 200 footfalls a branch. And we had approximately then 7 or 8 million monthly active mobile app users. Today, that mobile app users is 16 million, and average branch visits is around 80, right? And of the 80, the vast majority actually are not customers. They are, bearers who have come on behalf of customers. So now the only reason, again, I'm simplifying this, but the only reason why a customer would be in the branch is either they are a senior citizen, etc., who are not very comfortable doing digital, or they are really pissed. They wanted to do something digitally, it didn't work. So now they want to shout at someone, so they've come to the bank, or they are not a customer, they are a bearer, right? So these are the 3 types of customers that you see in the branch. Now, coming to the adoption point, there's been a massive shift, right? So in 2019, about 27% of service requests in our bank, service requests meaning you want to change your address, you want to change your mobile number, whatever, right? New checkbook, new debit card. 27% used to happen digitally. Now, today, 70% happens digitally. Digitally means customers do it on their app. There is no human interaction at all. This adoption has been driven because customers find something simpler and easier, right? The adoption is not driven because I stood up one day and said, okay, from now on we will do digital, right? The customer is finally the king or the queen. So adoption is when customers will find something useful, and that is what we have to think about. The last question on economics, it's a very simple answer. There is no economics. Like the favorite example I give is that if you look at Alipay or VPay, or if you in the US you were to look at any debit card transaction, etc., somebody is paying between 2 to 3%, right? So if you're kind of transferring money in China from me to him, then I am paying 2%. In India, that number is 0. You pay 0 when you make a UPI transfer. Account aggregator, there is a company called Plaid in the US, was sold for I think $12 billion. And they were doing what account aggregators are doing in India. In India, there is some fee for account aggregators, but as you said, it's not a lot. Nobody, for sure, no account aggregator is going to be valued even at 1/10 of that, or 1/10 or even a 1/100th of that Plaid, right? So DPI, one of the core philosophy, I think there are two core philosophies that India has taken as a country, which is great. One is that DPI is for public good. It is not. So what India has done is that this, if you go to the US or China, what is private profit made by some corporate, Alipay, VPay, Zelle, etc., Plaid, etc., is now the economic benefit has been pushed to the consumer. Right, so it's cheaper for the consumer, and it's kind of hence the economic benefit has pushed to the consumer. So this is one guiding principle, that digital public infrastructure will kind of benefit the consumer, not the institution. And the second one is that the data is the ownership of the consumer, and not of the entity. Again, very different philosophy, right? Like in the US, it's completely opposite. But here, your data with Axis Bank is just a custodian of that data. It's your data. You can use it whichever way you would like to. And hence, in both of these cases, frankly, the economics of this is going to be quite cutthroat, and perhaps how it should be.
Yeah, I think wonderful. So while we are getting deeper and deeper in banking, so let's understand from Vivek on insurance part, and that too he comes from another territory, rather he is Indian in the sense US, right? How I think India is a good example on DPIs. We have seen some of the more examples on payment side. Some other countries are doing, Singapore, Australia, and in Brazil, so on. But how do you see the adoption in US? And do you think US has, like Plaid is one example where we have seen the account aggregator, or in EU we had seen PSD2, or now new version is coming out there. And people say let US should learn from India, but they have their own methods to do financial services, and people are happy with that as of now. There are credit unions, there are banks, there are branchless banks also. And how do you see, what are those learnings a country like US should take around DPIs from India to US? And how do you see insurance? Like there are a lot of questions, like how do you see insurance sector in India should adopt DPIs to penetrate more insurance? Maybe personal insurance, maybe 3 to 4%, so far so good. And there is a long way to go on the awareness, adoption, but technology plays major role. The way we had seen customer convenience, whenever it comes, people start utilizing it. Yeah.
So I'll stick to insurance. And talk more about insurance. So if you compare the maturity of insurance industry from the US and India, I would say that, please don't take me otherwise, but US is at least 50, 60 years ahead. Not only in terms of insurance adoption, but also in terms of the maturity of the insurance industry, as well as the penetration levels is above, close to 95 or above percentage in terms of, when it comes to adoption of digital means and ways of doing any transactions, I would say that one of the main things which has been addressed is in terms of to what extent they have made it seamless, simple, and with very minimal risk, people are able to transact with any insurance company, do digital transactions or anything of that sort. Giving you a couple of examples, if I have to just tell my insurance company that I have been wrongly charged, it's a matter of minutes that charge will get reversed, because the whole industry, the whole country works on trust basis, not on doubt basis. So there is a significant shift between the way US works and the way India works. So with all due respect, please don't take me otherwise. I just like to be very candid in my comments. But talking about the subject, if I have to just come back on the public infrastructure and the way it's going to foster innovation, I think India, I would say, is way ahead in terms of adopting that infrastructure, because the amount of people who today, youngsters I'm saying, who use AWS and create new apps, new applications, and the adaptability of those new applications among the public has been extremely high. So I would say that in terms of the future, there is a lot of technology adoption which I'm seeing in India, which I see US lagging behind because of various reasons. Because if you look at US invested in technology maybe 100 years ago, 50 years ago, and things like that. Whereas India and other African countries, if you look at, they have the advantage of taking a technology leap of almost 30 to 40 years in the matter of months by adopting the most current technology. And the good part about India is also that the technology is being made very affordable. So that was another aspect which I see where the progress will be much more faster when compared to the US, because we don't need to spend millions of dollars to put up a system. Maybe it can be done in a $50,000-$100,000 investment. You're able to get up and running. So that is why, that's what I would say.
Yeah, thank you. I think before moving to Rajiv sir, Ravi sir would like to understand, you have seen as a veteran mentor for many of us, banking, insurance and technology plays a major role. And where we reach after a lot of maturity, at least in India, three of those, UPI, Aadhaar and account regulatory is coming. We are talking on couple of more are coming out there. But at the same time, there are few areas which needs to be taken care. And in my session, I was talking about two major areas. One is on cyber security and data security, and the other is around how do we really look at the futuristic ESG models, or how do we really look at sustainability model. So DPI, when we talk about doing it for public, we rename it as a DPGs, digital public goods. So can you just highlight these two areas, cyber security, data security? We have seen UPI penetration, but at the same time we keep seeing some of those experiences where we keep on building enhancements. Yeah.
Thank you, Prasanna. Good afternoon, everyone. So let me talk about the experience that I have with regard to, I worked in a public sector for 20 years, United India. I worked with AXA, the global #1 company, for 15 years. So I have both the private sector, public sector experience. Talking about the cyber security, the question which people are asking is, should I spend so much to protect myself? This is something which everybody is asking. But the answer which we always say is, when somebody is attacked or hacked by someone, there are only two categories of people which I personally feel. One is the guy who has already been attacked, let it be an individual or an organization who is already attacked, and he doesn't know what to do. Okay, at least that guy is much better, even if he has lost some 50 crores or some small guy, he wrote to. But the second category is the guy who doesn't even know he's being attacked. It's been happening in his organization, but he doesn't know. He comes to know after 7 years. That's a more dangerous thing. The awareness of cyber security has been relatively very, very less in terms of people, organization, and whether should we do it, because that is what is more important. Now, since I come from an insurance background, let me tell you very frankly, insurance companies are supposed to protect the risks of individuals, but are they protecting themselves? Recently, we saw two big companies, data theft was happening just like that. What is that we are doing about it? That's point number one. Point number two, whether the employees do have the flair to get into this. While Vivek was talking about this thing and Prasanna was asking, one simple thing which I like to say on both sides, either it could be positive or negative. The most positive side I see in the Indian market of adoption to technology in the insurance space is, many of us book our tickets in IRCTC. The moment you book your ticket may come late, but your insurance policy comes faster. All of us would have observed, yes? SMS comes faster from either United or Royal Sundaram or Liberty. Are we not fast, Prasanna? I'm just asking you a question, right? There is much of a difference between digital transformation and automation. Classic example I'll give you. Suppose I'm traveling from Chennai to Bangalore. Somewhere near Vellore, vehicle meets with an accident. Earlier days, you have to call up somebody and all calls. Now, you have a system by a public sector company. I don't want to name because it will be publicizing the company. You call that company, the call center, it's not attended by any individual. It picks up like a Uber or Ola, immediately throws, the vehicle is met with an accident in Vellore. The signal goes to 10 surveyors And whoever accepts the survey first gets it. If the claim is less than 1 lakh, AI takes a photograph, the surveyor takes the photographs, AI does assessment, less than 1 lakh, the company sends a message to you saying it is 70,000. If you accept, 5th minute your money is transferred. It's happening in India, right? Now, whether everybody has adapted, now there is something called artificial intelligence, use of artificial intelligence, and the moment of truth in insurance is always claim. It's not issuance of a policy. I'm not interested in the policy. None of us, I have been working in insurance for 35 years, I have never read any of the policies. Except for taking classes, I had to go through what all conditions. Okay, other than that, I have never read a policy. Now, the moment of truth is in claim, are we automating that? Now, India, automation in insurance has happened in a big way. But use of artificial intelligence, as Vivek said, we are very, very backward. We don't want to spend money on artificial intelligence. So the guy who's prepared to give you, saying that, give me your blood report, your ECG, I'll tell how much time this possibility of a heart attack for this person, his medical premium will be thrown in within seconds. Whereas Indian companies do not want to go for that because of the cost aspect. So we need to look at either way. Somewhere I feel on the digital transformation, automation side, yes, we are moving ahead. In some of the countries, when I say motor policies are issued immediately within seconds, you give a check to an agent, within 5 minutes the policy comes, which nowhere happens in the world. It takes minimum 1 month. They said reality. I said, yes, it's the reality. So, in some places we are really far ahead. Some places where we have to spend, we are not doing it. Like that's where, when he said, one of the companies in US is doing for a climate, one of the professors was talking about climate. I'm associated with one of the companies which is creating a software for climate change, because climate financing is going to come in another 5 years from now, international agreement, where one country will have to pay another country if you are polluting the other country. US has already gone ahead, and I am consulting for a company who's developing a software exclusively. They have divided the industries into 1,700 industries, how much they are doing, and they are going for automated underwriting, which means nobody. That particular company told me, Ravi, I don't want any underwriters in my company. I want only salespeople. So this is the way it is progressed. Thank you.
Yeah, I think very energetic, sir. I think while we have spoken about what has happened, the current moment of DPIs, we spoke about how banks, insurance, and real-life examples we are doing. Now there are some, and that gives a lot of confidence to the ecosystem, confidence to regulator, to the BFSI, all the regulated entities, and we start dreaming what more as a future of finance. How do we do more innovations for our end users, where innovation has not happened, MSME, SMEs. I think there are a couple of initiatives, rather 3 initiatives, while one is public credit registry, which is in discussion, which will keep coming as a and it will evolve KYC and other areas. Other which we keep hearing last 2 years, CBDC, e-rupee, which is one of those path-breaking initiatives. While there are 111 plus countries working on individual CBDC experiments, like instead of paper money, how can the distribution of paper currency can happen on a digitally, so that we can do with lot of operational gaps, and there are many more additional gaps which we keep seeing, money laundering and many others which keep happening. And it's a larger forte is around financial inclusion, how last mile everybody in the world will have a finance access without bank account, the way it is being designed, defined. 10 plus countries are live, rather on pilot stage, and it's a changing of money. So it will not happen the way UPI happened in 3-4 days, and adoption has happened in one country. It is a global innovation, which every country should align what other countries are doing. There has to be some standardization between Singapore, India, and where IMF and Bank International Settlement plays major role to do a better standardization. While every country started, China has started, there are some smaller countries in Africa, they have started. And when we talk about India story, we announced coming in of e-rupee, E-R-U-P-P-E-E, while there is another product called E-Rupee, which is a sachet product from NPCI, which is already live, and SBIs are utilizing for DBTs and others. But this particular product, which announced by our Honorable Finance Minister in February 22, The concept paper came in September 22, and we started a pilot with the 4 banks, followed by another 4 banks, and today we are 17 plus banks on a retail CBDC and wholesale CBDC between bank to bank transfer, where we can do it with a reconciliation at the end of a process. So this is a path-breaking journey which banks are now coming up. And while we do this, people like us, as an end user, may asking UPI is there, why we need CBDC? And why we have invested so much on UPI, where there is a zero cost on UPI at least, and bank have to bear that cost. And this moment is starting. And it's well supported by government and RBI. So, sir, we'll come to your guidance on e-rupee, which is one part. And another initiative we heard, like unified lending, right? ULI, unified lending interface. And sir said, like, the UPI is so swift, it happens, but lending is a different exercise, whether it's feasible to have a ULI. So over to you, sir.
Yeah, thank you. So let me respond to you on CBDC, but I will start with a disclaimer first, that this is my personal opinions. And hopefully your regulator is not in the room.
They are not there. They are using artificial intelligence.
So, as in the case of UPI also, Samir responded that it has taken quite some time actually for the UPI to mature, and the numbers which we boast of today, which we've actually tom-tom around the world also and keep saying, that has taken a lot of time, a lot of effort also to actually fructify. CBDC, as Mr. Prasanna also mentioned, is 2 years old. That is one. Secondly, the CBDC, if you look at it, basically it's on the retail side. That it is actually the impact of the adoption, or the adoption is largely impacted by the design and the implementation framework which has been used to actually bring out that particular product into the market. Unfortunately, by the time CBDC came into being and the pilot was launched, and we are still in pilot, UPI had become very ubiquitous. Actually, UPI, everybody, every nook and corner, every person, anybody whosoever was there with a smartphone on, again with even feature phone, they started using it. It became so easy to use, and so CBDC, I think the timing was a slightly issue with the start of the pilot. That was one reason. Another is any adoption, when it comes at a time when already one product is there into the market, which is being used very aggressively by the people and very popularly established, there has to be some perceived, I think, safety, or at least perceived, I'm saying, perception of safety, security, and ease of use also into the public who are actually already using and they want to switch over. So first of all, that perception, I don't know whether it has got totally created right now, because as I said, given a choice, even a lot of bankers would be actually having the e-rupee app on the CBDC app on their mobile app, but when it comes to make the payment, they will still use a UPI. Okay, that is so. First, perceived safety is one of the key requirements. Another, I would say again, more from the understanding perspective and the acceptance perspective, is the ease of use, or ease of switching over between different kind of options and the payment alternatives. So that perhaps, though it has been made interoperable with UPI, but perhaps that is still not very known, or very aware, very popular. Still not much awareness is there into the market. Another reason I would say is the anonymity part. That remains a big challenge. Privacy and the anonymity part, that remains a challenge. One more thing which I think needs to be addressed is to how to handle this balance, how to make it remunerative. Because whatever balance you transfer into the CBDC wallet, the customer stands to lose the interest. So, what exactly is the benefit that he will get in case he loads the wallet? Why will he do it? He will lose interest actually on that particular portion. Not only the interest, but it's not, the clarity is still missing whether that the insurance coverage would be available to that particular fund which is there in the wallet or not. So I think these 4-5 fundamental issues need to be handled, need to be actually established into the psyche of the people before the adoption happens. So as in the case of UPI, I think this is something wine which I think needs some time to mature. So let us see how the things evolve on that. But on the wholesale side, I think I would say, nice use case which can be built around it, not only in terms of because the process efficiency and the efficiencies in settlement system that it brings about, and also in the cross-border transactions. There I think some use cases can be created. Coming to the ULI part, see, by the time ULI came, most of the users actually, the entity who were using that services, they have already created some services around their products already, because it's fundamentally APIs which everybody uses. So now the ULI is there into the market. So there has to be a requirement that, okay, you have to disengage with the existing service provider, you have to disengage with the existing SLAs, and then engage with the ULI. So that is one, I think, challenge. But going forward, once that I think matures, the ULI matures, and banks get a benefit that, okay, there is a single window, you go there and get all the services, all the required services for lending use cases, for liability use cases, for cross-selling use cases. I think then that would be the right time actually for the ULI to actually take off.
I think one more, just to support you, sir, I think success of CBDCs lies into monetary policies, as you said, how to lay down a monetary policy at a country. Like there is no interest. How do you, like for example, Bahamas launched and they started giving interest also. Yeah. So that was a little tricky for them. They had to roll back. There are some other challenge like technology. Like Nigeria country has launched eNaira, rolled back and relaunched. So technology is what type of is it token based or value based? Wherein our we are in that process as a wherein it is known that RBI is driving it, NPC and others. So we yet to get to that production rollout. So there could be some change requests which will keep coming in. And finally, important aspect is use cases. Why we are doing like DBT transfer, some or cross-border will be so easy, and eventually we'll have a lot of use cases. So Samirji, you would you like to highlight on the remarks of Rajivji?
So both I think both CBDC and ULI conceptually very strong kind of concepts. But then as Indians we have to get to 1 billion. So kind of all so we are all focusing on now how do we get a half-baked thing to 1 billion versus getting a full solution. So let's take CBDC, right? So see, if we think of CBDC as an alternative to UPI, CBDC is dead on arrival. It's just not possible to move people now from UPI to CBDC. But what CBDC does is, CBDC is new technology actually. So I'll give you an example, right? One use case that we can think of is that my son, I can transfer some CBDC money to him and I can program in the money that he can only use it in his school. Right? So, programmable. He can't go to, Apple Store or Play Store and buy some video game. Or he can't go to a restaurant and use that to, have food. Now, this is one example. There are so many examples, like, let's say you want your driver to fill petrol in your car, you can program that it can only be used at a petrol pump. And you want to do government wants to do some direct benefit transfer for gas, it can only be used for gas. Very powerful use case, right? There are many others of this nature, by the way, that can happen. But I think we have to give CBDC the time to kind of, and also, by the way, all of us have to focus on doing that versus doing the 1 billion. I think Rajivji knows what I mean. Same on ULI, by the way. The concept of ULI is that there is so much powerful data. So, one of the things that ULI has done well is land records. So, any farmer can come to, like as an example, come to Axis Bank and just give their land the record number. And with their consent, we will pull that data from, let's say Madhya Pradesh. So all the data will come digitally to us and we can give a loan on the back of that, right? Very powerful because ULI has opened that data for banks to do some. Right now what happens is that the guy has to go to the registrar, get some Satbara, and then 20 stamps have to be put signature, then somebody will go legal, technical, all this will happen, and on top of that fraud will happen. Here there is no scope of fraud, it's coming directly from data source. So this is the concept of ULI, that they will enable consumers to provide their data to banks and other financial institutions to be able to get loans, whatever else.
Yes.
Unfortunately, what ULI has done is that they've taken the same services that we already have and put it there, and now we are running after the 1 billion
Bang on.
there,
So
right?
I think, I think practicality of any of these, like CBDC will evolve. It is a future of currency, so it has to happen. But we will solve all these technical adoption and bring on a lot of use cases in front of us, DBT, and there are many more use cases. And eventually, I could see, in my personal opinion, UPI wallet and CBDC wallet will touch base somewhere, maybe down the line 1 year, where offline both or programmable. There are some CRs which are coming in UPI that way, and eventually both will become same. But I think UPI wallet will be always out, the way UPI is part of a mobile banking app today. And ULI, as every bank already has those ULI kind of concept. But right use cases like this, like Kisan or a farmer is getting loan available to weather conditions, these, and a complete identity apart from your KYC identity, the identity which is in combination of a land record, weather, that can become a future way to give loans to the farmers, and there could be many use cases. I think we have discussed almost all. There are some more pointers to be discussed technologically, how blockchain or AI can be utilized. As you sir said, how interoperable ULI should talk to UPI, or how account aggregator should talk to another DPI or another ABA. So how do you really bring on that synergy? So technology plays major role there. Another when we talk about best practices of any DPI, where you spoke some parameters, just to add, having right identity, whom we are onboarding on the DPI, right? Customers, or like in vehicles, we have Vahan and Sarthi. And second factor is transaction, how transactions are happening on this identity. And then lastly, data exchange. So data exchange between UPI, these DPI is also a major role. So I think what banking has worked on, slowly getting into mobility. Like Vahan Sarthi is there, toll collection is there, but data exchange is not there. The car of Hyundai is not interoperable, or that OEM is not with Mercedes or this thing. That's how, but eventually that will also be a good DPI kind of ecosystem.
Prasanna, I would just like to add one more point from the insurance perspective on connectivity. One just classic example, which probably some of us are aware, some of us are not aware, how it's connected. It's really amazing. In a day, there are 10,000 landings that happen across the world in different airports. Every data is connected, one. Number two, there are 250 data points from where it is connected, where your flight delay is covered. When you enter an airport, you pay 50 rupees premium. When you land, if the landing time is beyond 2 hours, 5,000 rupees is credited back to the same account from where you took a policy. This is presently happening. I just thought I should share the information. This is the best, this thing that has happened in the blockchain of insurance space that has happened, which means all the airports across the globe, 10,000 landings are monitored. Wherever there is a 2-hour delay, immediately somebody looks into the insurance thing, and there are 250 data points which have been done with 10,000 landings. And 250, it's not 1 or 2, it's 250 data points are connected. So this is a classic case which we thought that we'll tell from the insurance perspective.
So I think we have seen just like a tutorial of DPI, what has happened, what is happening, and what's going to happen with all the set of panels, regulator, banks, insurance, practitioners. So if there are any questions, we can always, that's what I have requested. And we are here during the lunch, we can have more question and answer.
So there's a lot of, I think I'm loud enough. So there are a lot of changes that are happening, as you mentioned, with DPI. And there would also be resistance within your organization, right? Resistance to this change and the way of